Good evening, good afternoon, good morning, depending on where you're connecting from. Here with me today are, I see him top left, Edmund Edgar, joining us from Japan. Edmund is a free software developer based in Japan who has built blockchain-based systems for both private and public networks for a range of clients, including the Tokyo Stock Exchange. He created the world's first smart contract oracle, Reality Keys, in 2013. It evolved in the Reality.eth, a crowdsourced fact verification system designed for smart contracts. And Reality.eth allows you to put any human language question and incentivizes people to answer it correctly. Immediately beneath him, as I see him, we have Clément Lesaege joining us from Dubai. Clément has an engineering degree from the University of Technology of Compiègne in France and a Master of Science in Computer Science from the Georgia Institute of Technology. He's the founder and CTO of the decentralized court protocol Kleros. He works on crowdsourced and smart contract-enforced dispute resolution systems, including a dispute resolution system used by the prediction market Omen. His interests include smart contract security, game theory, and mechanism design. When he's not working, Clément is a competitive player of the trading card game Magic the Gathering. And we finally have Paul Sztorc. Paul has been interested in Bitcoin since 2012 and interested in prediction market his entire adult life. After Intrade.com was forced to close in 2012, he set out to immortalize the institution using blockchain technology. He was hired privately in January 2015 to work on Bitcoin full-time and has worked for the startup Block Inc. since March 2016. In 2018, Paul released his open source project DriveChain, a protocol that allows a variety of alternative blockchains to work in unison with the BTC network. Sztorc's DriveChain system claims to allow permissionless innovation without diluting the value of the main cryptocurrency. His interests include the uses of P2P blockchain technology, blockchains without a mailing address, and in how blockchain users can resolve disputes over what the blockchain should contain or do. So several of you have already posted some questions from which I will sample. And behind the scenes, the four of us have also debated some questions that I can use as fillers if there isn't enough, if there are enough questions from the audience. So first questions that I see comes from Samuel. And Samuel asks, oracles like Chainlink pay their clients with their own token. How do you make sure that your clients hodl your coins? So any of who wants to start on this?
I probably shouldn't say much because we don't use a token for Reality.eth.
Okay.
But there are a lot of game theoretical systems that do use a token, and ultimately, if the thing is properly designed, I think the other guys will maybe talk about this in maybe specifically. But if it's properly designed, then there is some kind of external source of value that is paid to token holders, right? So in some way somebody's paying fees or getting some value out of the thing, and they're paying fees, and that's somehow going to token holders.
Okay.
Yes, there's a theorem in mechanism design about there's like these four conditions, and one of them has to be violated. And I think clearly in the Oracle case, the one that you violate is what they call budget balance or something, where you need it's like an engine, and it needs fuel, and it doesn't necessarily need, the proportions are unclear, but you need some fuel to power the engine to get the truth out, because there's always an incentive for the Oracle system to lie. Because if anyone is making anything of substance rely on the Oracle, then it will be that will just be as much money as is up for grabs if you can trick the Oracle into giving the wrong thing. So the Oracle can always generate money by lying. So you need to give it some kind of offsetting thing, and so that is. So then there's very different conceptions about exactly how to do that. But I really liked Edmund's original project a long time ago. It took a very kind of like we will, Reality Keys was just like we have this big database of all this stuff, and we will try to keep it kind of very light, and we will try to keep it so that it's like, how to really describe it is that it's kind of like, it's like as much of it would be automated as possible, and there was like kind of not as much of the whole, you were just trying to get around, kind of getting around the Oracle question. The thing that I designed was really the opposite in many ways. Where it was like very, very, very resource intensive thing that was designed to get the right answer on a very, very, very small, narrow number of questions, but at like an enormous expense. And then since then, stuff has sort of filled out in between, mostly with the whole, like Chainlink is, as I last understood it when I last looked into it, was this whole choose your Oracle multi-sig aggregation type of thing.
Right, but if I may, the question was, what incentives can a maintainer of such a market put in place to incentivize people to hold on to their coins if the market is operated through a coin?
Well, as Edmund said, that you have to. Well, and as I was also saying, you have to. The engine needs fuel, so the money needs to come from somewhere. And as Edmund was saying, the logical thing is the user who's taking advantage of the service is to they would be the one who pays in. So they pay in, and then but then it's of course substantially more complicated. How is what they're paying in related to what goes out to the people answering the question?
Yeah, but there's the parallel question of why you would want to keep your tokens invested in that venture as opposed to cash out and do something else instead. Clément, can we hear from you on this issue?
Yeah, like client is a bit of an undefined term. At least in Kleros, you have two main categories of users. So you will have the jurors, which would answer the Oracle question, like among other sort of questions. And then you would have the application connected to Kleros. So here, Reality is an example of such application. And the application can be also connected indirectly. Like, for example, you have Omel, which is connected to Reality, which is connected to Kleros. The application using Kleros, they don't need to have the coin, they don't need to deal with PNK in any way. But when they have dispute, they need to pay some arbitration fees. And those arbitration fees are going to the juror, and then the juror, those actors need to have some PNK that they stake. And because by being a juror, you get some arbitration fees, then being a juror is valuable because you get paid some fees, obviously for some work. And if you want to be a juror, you need to stake PNK. So where does the value come from? Where does the need to hold PNK come from? It comes from, you get PNK, you get some chance to be drawn as a juror, and when you're drawn, you get some chance of getting arbitration fees.
Okay, excellent. So that was very direct. Thanks, Clément. Anyone else wants to add anything else on this particular question? If not, I would move to the next one. Okay, next one. So Alberto is asking, given the fact that the vast majority of Oracle-based solutions today are focused on DeFi or to a lesser extent play to earn, how difficult do you see implementing oracles on a regular basis for up-to-date health information, legal or bureaucratic obstacles aside? Who wants to go with that one?
Okay, I could try. So it's certainly true that a lot of the oracles that are most used right now, which I think there's nobody here really representing, but stuff like Chainlink and the MakerDAO oracle are based on the problem of getting kind of automated data feeds, basically automated data that's already on a website somewhere, and getting that to the blockchain. Whereas for example, I mean, thinking about the prediction market use case, it's usually more like you have to kind of create some information, right? You know, often you haven't got a data source that tells you exactly what you want to know. So you need a human to answer a question, to feed to your contract. And I guess health information could kind of fall into both categories, right? So there's the kind of the Internet of Things angle to it, where there's a lot of sensors all over the place, and there's a lot of data being created. But how and health providers maybe have a lot of information, and maybe your health insurance provider has a lot of information. But how do we get that to the chain? And then there are probably also kind of questions where the information isn't yet available and somebody has to answer a question. And both of those are things that that people are doing in the space in different ways, either kind of the data feed end or the kind of the create information end.
Yeah,
You joined us. Yeah.
I think it's going to be slightly more complex than what we are currently tackling. Like I think both, all three of us are working on Oracle to get some public information on chain. Here, like health information, you're asking about something which is private. So first, is it something we want? Because putting your private information on chain, you probably don't want to do that, at least not in a naive way. So you will probably need to have stuff like zero knowledge proof, for example. You may not want to say, okay, I got this disease from this period to this period, but you may have a proof that from this period to this period, you were not able to work, whatever the reason. And then this has some value because, for example, you want to have some health insurance on chain or like some unemployment insurance on chain. Then I see where there could be some value there. But you will probably don't want to have the health information directly, but more only what is relevant for the application which we want this information. So yeah, like first difficulty, you want it to be private. The second difficulty is that it's something which is not publicly accessible. Like if you want to ask who won the US election, most people can answer this question. Now, if you want to ask when was the last time I was sick and how long, not much people will be able to answer this question. That would be some specific party, healthcare provider. So I guess in this kind of solution, you would probably need to trust some sort of healthcare provider to give you attestation. But I think it's a completely different problem than what all of us three are working on.
Yes, I would agree with all that. I think my conception of the Oracle problem is very different. It's that why do you need it on the blockchain at all? And that's because you're doing something trustless. And so I would rather go for big, high-impact questions like a neglected feature of prediction markets is that they not only bet on things that you expect to happen, but also you can bet on different versions of the future that may pan out. So you can make questions like, should we elect this president or not, or should we fire this CEO or not? And those are the questions where those are the questions that would actually make a difference in the world. And those are the questions where people might have secret information that they would otherwise conceal to themselves. But if there's a market where they can make money by selling it, then they might be induced to share it. And so that's kind of how I see it being used. I don't know. The question is not very clear about like health information. Like, I don't know. A lot of this is just X on the blockchain, which is just like I think people put on PowerPoint slides. It doesn't mean anything, unfortunately. But I think like you could say like, should this person be the Surgeon General of the United States? Should this person be the administrator of this hospital? You put the decision against some metric. So you say there's something that you care about. Whether it's going to be sort of tricky in the health space, but there were these things, quality adjusted life years, but it could also be like anything you hope the hospital improves, like the customer service rating, or maybe someone ranks hospitals and you could say the hospital's ranking. And then when you bet in a market, as long as you have an Oracle problem fixing this in the future, you can have prices today that say, hey, with this administrator, we'll probably be ranked 7. And then with this other administrator, we'll be ranked number 1. So we should go with the number 1 person. But that's only possible if you have a reliable way of getting that one question. Which administrator did we actually pick and what is our rank? And as Clément said, the Oracle problem, it needs salient information, it needs information that people can easily learn about. So they could look up the ranking and they could look up who the administrator is. That's at least possible, but other things become very confusing. And it's just like, shouldn't the doctor just sign a message with their key, and then there is no Oracle problem. There's just a authentication problem.
Mm-hmm. All right, so I would like to move to, so I see that additional questions have been asked, so let me just deal with one of those that were asked before. Okay, so Andrew is asking a rather open-ended question. So at some point, probably I'll have to rein you in just to make time. So Andrew's question is, are there creative ways to create a prediction market without having to rely on external data feeds? So who wants to go first on this
Depends
one?
on what they mean by external data feed, but I definitely think that you do not need data dripping in. I think constantly, like every day, like a feed. So that's usually what people mean by feed, but I think that that's actually a mistake, because there's basic efficient markets hypothesis and other finance knowledge that if you have something that's going to be worth what a barrel of oil is worth in 6 months, if you have that today, then it's no different than owning a barrel of oil today. And so the prices should be tightly connected, and that's there's lots of finance knowledge about that. You can consult anyone knowledgeable about finance. The spot price and the futures price are the same. The futures price is just the storage costs for the 6 months and how that's going to change. So I think you don't need a drip. What you really need to make sure is that the few times that you do check in with reality, that it is accurate. But you do need something to do the Oracle problem, or then there's no way for the blockchain to send the money one direction or the other.
Edmund and Clément?
Yeah, I think you can do, like, you may have creative way, but only on a limited set of problem. Only on problem which are only on-chain information. So for example, you could make on Ethereum, you could make a prediction market on what will be the gas price. So that you could do because you have a way to know the gas price on-chain. You could make some prediction market on will this DAO vote this proposal or not, because the result will be on-chain. So you can do that. That's going to actually be more secure than like general question kind of prediction markets, because you remove the risk of the oracle because you don't need an oracle. But that's very limited. You're only limited to on-chain asset and on-chain information. And if you only limit yourself to that, you end up in some sort of like a self-referential system where you are just playing with crypto, and it's not very useful for the world because you just refer to yourself. But I think it's way more interesting if you are able to make prediction market also on outside information. But if you only care about stuff like price on the DEX or vote in a DAO, well, don't use an oracle. Just use on-chain information.
Edmund, want to chime in?
I think that mostly covers it. Although, I mean, one thing I would say is that one type of information that we could say is just kind of on. I don't know how we define, what's on chain and what's external, right? So one thing that we can do, kind of purely on chain, is if you've got an on chain system, we can do futarchy about the value of that system, right? So if you've got a DAO or something, if you've got a group of people with a token, then you can make decisions on the chain about what that organization should do, also on the chain. Now, if we look at, for example, Truthcoin, which is Paul's, kind of sort of seminal piece way back in the day, where he kind of solved the Oracle problem, which a lot of us thought was kind of insoluble. What you do is
it's still ahead of its time. Time is catching up.
Time, right? I'm just gonna take one aspect of it is that what you do is you exploit the fact that you can solve a governance problem kind of purely on chain, right? So if you have a governance problem of what should this DAO do, right? What should this distributed organization do? then you can have your incentivized token holders, vote on that, and if necessary, you can make, multiple forks of it or whatever you do. But you can do governance kind of purely as an on-chain thing. And if you can do governance purely as an on-chain thing, then you can say you can govern what should this organization do. What should this organization give as the answer to a question about the outside world? So what you've done is you've changed a sort of an on-chain governance question into an external real-world question. I don't know if anybody followed that, and maybe Paul can say something more coherent about the system that he designed. But I think that's the point, is that you can do stuff on chain, and you can incentivize people on chain to give answers about the outside world using those on-chain mechanisms.
Right. The thing that I designed doesn't really have feeds at all. As I said, I don't like the feeds. I just like the questions. And it definitely does not I don't like the idea of dialing out to a website. I think that's also doomed because to sync the blockchain, you need to know, you need all the data in order to know that you have valid blocks and that you're on the longest, heaviest chain. So you cannot, if the Oracle system says go to this hyperlink or look up on Google, whatever, you only know what you find on Google today. You don't know what they found back on whatever, whatever it was, October 12th, when it actually ran in real time, and that means the blockchain is in a state of being undetermined. It's not it means you're completely screwed. So I think everything that has to do with the resolution of the Oracle question, all of it has to be brought on chain. So I have all these different people submitting all these ballots on things, and they all come on chain, and then stuff happens there, and then finally the questions are all resolved. So it's not so much a feed as a kind of a giant magnet. I pull it in.
Right. So in the interest of time, I'm moving on to 2 more questions that have come in. There is a question from Mateusz that has a rather technical bit. So I'll have to ask whoever takes the question first to explain the technical bit so that everybody can follow the answer. So Mateusz's question is, how can reputation mechanisms help to prevent attacks on Oracle? Can altruistic action by actors become a sufficient condition to prevent P+epsilon attacks? So for one, I don't know what a P+epsilon attack is. So if one of you could explain what that is and then proceed with their answers, that would be super. Thank you.
I remember having a big conversation with Vitalik on it in the comments section of his post titled this, but I'm struggling to remember it all now. Maybe Edmund, you can help. We can figure it out together or something. What did it have to do?
I don't know if I can go for it.
It was something where the epsilon is a small amount, of course, and so then it's the small amount is like a bribe on top of something else that makes. But I remember that I had a long thing, and I had the thing disproving it. So now it's very ironic that I can't remember it at all. But I don't remember whether or not I proved the case for it or against it or what it is. But let's try and remember. Maybe someone else remembers.
Yeah, I can explain that.
Okay, good.
So basically, the idea of P+epsilon attack is that you pay a bribe to people voting the way you want, but only if what you want to be voted is rejected. So example, you have the US election, you have the election, and you want the Oracle to return Trump won, which is false. So what you're gonna, first, let's look at the mechanism. So let's say something like Kleros. If you vote for Trump won, but the result is Trump lost, you will lose a bit of token, and you will not get arbitration fees. If you vote for Trump lost, and the result is Trump lost, you will get some arbitration fees. So you have some reward by voting with the final result. So what you do with the P+epsilon attack, you tell to voters, you say, oh, if you vote that Trump lost, and the result is that, if you vote that Trump won, which is false, if you vote that Trump won, but the result is Trump lost, I would pay you the arbitration fee you should have gotten if you had voted for Trump lost, plus a small amount. So now, as a voter, you can see like two possibilities. Either you vote for Trump won, which is false, and the result is Trump won. So in this case, you will be rewarded by the mechanism because you will have voted for the final result. But now, if you voted for Trump won and the result is Trump lost, you will be penalized by the native mechanism, but then the briber will pay you back plus a small amount.
And sorry, quick follow-up question. What reasons do you have to believe the briber? That
or you can make a smart contract.
Okay.
You can make a smart contract which falls the bribe. It's
okay.
Really a problem.
Right, but that was actually the kicker of it, though. It wasn't really anything new until Vitalik introduced the last part, which is that you can make it trustless. You can say, I will pay you only if it says that Trump won. And so you have a bribe that goes through, you have an anti-oracle or whatever. But I remember what I argued now against him was that this logic doesn't converge at all, because you have bribe and then you have counter bribe, and then someone does P plus epsilon on the other side. And then so this argument becomes, it seems like it's an advance on what we were saying, Edmund and I were saying earlier, but it isn't really. Really, at the end of the day, there's just the opportunity cost of honesty. That's the framework. And maybe I'll give a tiny example to show you just how brutal the Oracle problem really is, and why, even though I really think I gave it the best shot of solving it, one of the reasons why I think it's been slow going is that even I have my own trepidation that it will really hold up. And that's because, so let's say you bet on Trump winning or losing. Person A bets $5 against your $5, and you put the $10 in a box, 5 plus 5, and you said the box is going to go. It's going to open back to me if I'm right. It's going to open to Edmund if he was right. And then, Stefano, you're the oracle. And the issue now is you control the box, and you actually own now $10. You don't even own $5 because it's so much worse than that. If I know that I'm going to lose, I can say, look, there's $10 in this box. I'm about to get 0. So if you give me $9, I'll give you $1. And you're like, oh, that sounds great. But then you go to Edmund and you say, hey, he's giving me $1. Can you give me $2? And then he says, sure, I'll give you $2. You give me $8. And it goes back and forth literally forever. And then, so you own the $10. So that's the problem, is the $10. That's the Oracle problem, is that all the money wagered on the thing is owned by the Oracle, and you have to do something to get. So so now let's try to answer the question now that the idea of reputation is good, but it's not very cypherpunky, blockchainy or something. But I think I always thought like maybe there'll be like an oracles.google.com or something, someone with a big reputation who like wouldn't be hacked. But the one thing I want to stress is this is a lot like running an exchange where you own the $10. So people will try to hack you all the time. So then and then there's the exit scam problem, of course, where you build up the reputation. And then you say, now that I have this great reputation, I'm going to take everyone's money and flee to the Caribbean. And so this kind of answers the second question about, can altruistic action by actors become a sufficient condition? Well, I mean, like maybe. I mean, it's $10 in the box. So it's like, I don't know, like, it depends on how altruistic you are, right? And it depends on all the parameters. So in what I designed, I at least addressed the exit scam by saying, instead of exit scamming, you can just sell. And it's like a big corporation on chain. And so you can sell your reputation. After building up the reputation, it has more value. And then you can sell it to new people, which is just like how startups work. And that's why the startups usually have nothing but nice things to say. Even after they've sold, they're just like, well, because they feel like they're an owner. So everyone's happy. And everything behind the scenes, everyone got along just great. It's like when you see those movies, behind the scenes movies, and you're like, everything was so great, and you're like, yeah, I bet it was terrible, but yeah. Everyone is really nice.
But perhaps adding a few stuff on this attack, why it's like it was scary is that it's an attack where if it works, you don't need to pay anything, because as a briber, if people accept your bribe and then they vote for Trump won, you won't need to pay anyone. You won't need to compensate anyone. So that's why this attack was kind of like scary. On your second part of your question, you asked, can altruistic action by actor are sufficient to prevent it? And the answer would be yes. Like if you have an honest majority, if the majority of people are not ready to take bribes, the attack cannot work. So like the answer is yes for that.
That works as long as they're not willing to take bribes, but also they're not willing to sell, right? I mean, they have to remain the majority. So
yeah, for sure.
In theory, what should happen in capitalism, as I understand it, is if you've got a bunch of people who are owning these tokens, and there's some way that they can deploy their tokens in a way that will make them more money than the current token holders, then what should happen is that they should buy out the current token holders, and they should then become the token holders and then do their thing that makes more money, right? So in theory, even if nearly everybody in the world is honest, and nearly all the participants in your community now are honest, in theory, somebody should be incentivized to show up and just buy out those honest people and turn the organization into a dishonest organization, provided that is actually, in their interest to do it. So in theory, I feel like, if you've got a DAO that has got this much money resting on it and the tokens of the DAO are worth this much money, right? So you could, if you can buy out 51% of the tokens or however many you need and rob the thing, then in theory that should happen. Now, what I would say counter to that, though, is that watching all these different organizations that we've got on the blockchain right now, and it's a pattern you really are not seeing. Like, you're not seeing DAOs getting, bought out 51% and then in some way abusing their power. And I don't know why you're not seeing it. I don't know if it's because, in fact, these are kind of human organizations, and maybe it's because when we think about these attacks that you can perform against DAOs, there are always sorts of counter moves that that mean it's not a good idea. Maybe it's because the value of tokens right now is already high. So if you've got a DAO to do arbitration or something, then it's really expensive to buy out compared to the amount that you can actually steal right now. Maybe that won't be true in the future. I don't know. But right now we're just not seeing stuff exploited at scale, and I feel like in theory we should at some point.
That's a really brilliant question and brilliant answer.
Yeah, and that's probably the market depth.
That makes sense. I think those are all. I think you're right. There's some kind of moral glue. There's also countermeasures because it's not as decentralized. Maybe there's like another side of that, and then maybe there's also like where the chips are up. I think that was right. Those are great points, and it doesn't make sense. But I think you should only. You're sort of torn between like relying on firsthand experience, or are we just being tricked in the short run, and then you should rely on the theory. It's like maybe you should discard the theory that people. I think I don't know. That was what I was wanting. That's why I actually liked your project, Reality Keys, because I was like, well, maybe that would work. And he actually launched a project. I had this like complex vaporware-esque thing for a while. And so I was like, I don't know, maybe that will work. And I always thought maybe like Roger Ver would do like oracles.bitcoin.com or something, where he would just do it, where someone would just do it and it would work. So it's a very good question. Why don't we see why doesn't anyone? But again, on the other side of that, we do see DeFi hacks all the time. We saw exchanges get hacked for a while. Eventually the exchanges figured out something. They're making so much money that they just get hacked and then they just don't tell anyone. They just self-cover it or whatever. I have no idea.
Yeah, because sometimes this does seem to happen with kind of types of attack, right? So I mean, one was reentrancy, just a technical kind of attack where it was kind of known, and it was in like the original Ethereum audit, that you could do reentrancy type of attacks and for a long time, we didn't see this class of attacks. And then there was the DAO, right? The famous, the DAO. And that was hacked with reentrancy. And then after that, everybody was paying attention to reentrancy bugs and everybody was trying to repeat the same trick. So
and
after
then
that,
you're like, oh yeah, I should have cared about the theory the whole time.
Right.
Like,
So
that's
before, that's
and then you're like,
just trying to think of a real world example. In Britain, they have these building societies, right? So they were kind of local sort of community banks, and the idea was that they were built as kind of mutual associations, so that they were owned by the participants in the bank, right? So if you were a borrower or a lender, you had one vote. You didn't have, if I had £10,000 in there, or if I had £10 in there, I had the same stake in this organization. And then somebody came up with this idea that you could, if a bunch of people put in £10, they could then vote to change the organization into a profit-based organization, right? Into basically a regular bank, in a regular shareholder-based organization. And everybody could sell their stake and get more money, turning it from a community organization into a profit-centered organization. And once one of those happened, a bunch of people realized you could put £10 into this slot and get £10,000 out, and then it happened one after the other, boom, 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 boom. All of these building societies, all these little community organizations, all turned into profit-based banks.
What's funny is I almost thought you were going to end the story by saying, but they didn't, because they all came together as a community or something.
Right.
Okay.
Okay.
Yeah.
Oh, go on.
And that, I think what Edmund talk about is what we call a 50% attack, where you try to control most of the token profile, whatever. Like we haven't really seen those, mainly because market is not perfect. The market is not perfectly liquid. So like if you want to buy 50% of a specific token, you cannot buy it at the current price. As you try to buy some, the price will increase. So that's some sort of attack, which would be very expensive. And also, it's not guaranteed to work. Like we've talked about reentrancy, we can also talk at some other economic attack, like what generally we call flash loan attack, where we buy stuff on an exchange, redeem somewhere, sell on another. And those kind of attacks tend to happen because, well, of two things. Like they don't require much capital because of flash loan. You can borrow the capital required for the attack, and they are guaranteed to either not do anything or work because you do everything in one transaction. So either you get the jackpot, or if the condition change, you just lost a bit of transaction fees. Now, if you want to get a 15% attack, that's a way more budget and risk for the attacker, because he will need to be able to deploy some capital for a long term, like the term of the attack. And if he fails, he has a tremendous amount of capital that he will lose in this attack. And actually, even if he succeeds, you also have a tremendous amount of capital lost in the attack because, well, you attack the system, you own 10% of it, no one will use it anymore, so you basically destroy the thing you bought at such a high price. So even these attacks are interesting theoretical attacks, and it's not just for prediction market. Like even Ethereum to proof of stake would be vulnerable to this theoretical attack. In practice, they don't happen because just too much risk and too much capital required.
Okay, thanks. So I see one last question that is, however, extremely open-ended. So before we get to that one, I would like to address a question that the four of us here on the panel have been discussing backstage before today's event. And it has to do with the economics of participating in a prediction market. So several questions today had to do with how difficult would it be to connect the prediction market to a resolution mechanism that is external to a blockchain? And you heard several answers to that question. So let's turn the question from a question of difficulty to a question of profit and self-interest, if you like. And that's actually building up on Paul's comment on the community getting together because they're all a community. Okay, so imagine that there is a person who has an incentive in getting other people to volunteer and aggregate their information to predict a future that is of interest to this person. So let's call this person Alice. Alice has a question. So Alice has a job, and her job requires her to make a decision. And in order to make a decision that is optimal for Alice, she needs to know what the world thinks about a possible unfolding of events. And so she is perfectly willing to subsidize the prediction market to create an incentive for anyone who has any insight on that question to contribute her insights. And so in order for this market to do what Alice wants it to do, Alice must be able to attract to it traders like Brianna, Carol, and Daisy, who not only know something about the question that Alice is interested in, but are also willing to invest time and mental effort to remain well informed about the question. Because they only profit, the traders, Brianna, Carol, and Daisy, only profit if they're actually doing better than the remaining participants in the market. So the two questions that I would like for the panelists to give us their opinion about is, number one, how is Alice going to find these Briannas, Carols, and Daisies and convince them to trade on this prediction market? Because, a priori, Brianna, Carol, and Daisy may not even know about the existence of the prediction market. And so for them to come to the market, it is Alice's job to find them. And so Alice must have what in a normal company is like a marketing budget. So a marketing department is the department that finds the type of people who wants to connect to your company. So that's the first economic question. The second one is that there are many questions, and Paul gave some examples of this earlier, where you're actually disbarred from contributing to prediction market if you do have inside information. So insiders trading is a crime. If you work, for example, for the security department of a government, you are certainly not allowed to divulge in whatever form information about what your security apparatus is doing. So this type of Brianna, Carol, and Daisies are almost by definition disqualified from participating in this market. So that leaves a group of, if you like, talented, intelligent, sometimes obsessed outsiders. So people who, not having an inside role in any of these organizations that Alice wants to observe, have, however, some insights. So the question then is, well, what based on the fee structure, and this also connects to the question about why would anyone want to hold onto tokens, based on the fee structure that you know to be in place for existing prediction markets, how much time and effort could an outsider, Brianna, Carol, and Daisy, be expected to spend on a weekly basis in order to break even on such a market?
Yeah, I think often when someone asks, how can we make people do X, the answer is pay them.
Is what?
Pay them. That's the classic answer.
Pay them, yeah.
Okay, but another question is, how do you pay them? So the way I would propose to you to pay them would be to pay for liquidity. So if you have a liquid market, imagine like you have the Trump election, is he going to be elected or not? If maybe there is like $1,000 of liquidity, it's not going to be worth to make your research because you will not gain that much. Now, if you have $1 million of liquidity, that's slightly more interesting. Now you have $1 million of liquidity. The trader will only make profits if the current market has mispriced the odds. So let's imagine that the odds are 60-40 and the current market is giving 50-50. In this case, you can get, you will get the profit, you will get an expected profit from the trade you will make to move the market from 50-50 to 50-60. So that will be your expected profit. Now, so how do you pay people indirectly? Well, you subvention liquidity. You say, okay, you put some money in this market liquidity, and you may lose because obviously, if I'm moving the market from 50 to 60, I'm winning something, but the liquidity provider are losing something. So how do you make liquidity provider ready to do something? Well, you pay them, you compensate them for providing liquidity, and so you give some token or any kind of reward to people put in liquidity. So the answer would be pay for liquidity. Once there is liquidity, there is an opportunity if the market is mispriced. If the market is well priced, well, good. You already have your answer.
Okay,
Yes.
but if I may insist, just a quick follow-up on what Clément just said. How much is somebody paid today, on average, across all the prediction markets that you know about? What is the hourly rate of somebody who puts in the time to do the research and move the market in the direction where it would eventually resolve? And
Zero.
is that market exactly okay? And so
because nothing is subsidized right now, right?
Right.
Yes. So this is
actually, that's not quite true. In a few markets, somebody's trying to rig them, and that person is subsidizing the people who are putting in the time to understand.
Yeah, no, and is an expert, and I know. See, the thing is, secret's out, I guess, because for years, so prediction markets always had terrible liquidity, and they've always been criticized on that basis. People say they don't work or whatever. And Robin Hanson, sort of the grandfather of prediction markets or whatever, he wrote like numerous long and short and all shapes and sizes pieces on this. You mentioned the magic phrase on how to subsidize the market. And this is not the Oracle. The Oracle problem requires its own subsidy or its own thing. Unfortunately, as I said, that needs fuel and an engine. This is its own different thing that needs fuel and an engine. And it's not necessarily about hourly rates or about whatever. You said, you used the phrase, I think I wrote it down, maybe like, but the crucial thing is, whatever it was, Carol and all those other people, Daisy, they have to do better than the other people participating. But there's a great risk that no one will be participating at all because the first person has no one to participate with. This is kind of a hold-up problem. But also, all new people may not join because they may think, well, maybe I'm the sucker or whatever. Like
Exactly.
everyone else isn't joining. What else do they know? Blah, blah, blah. And so Robin Hanson wrote all these papers about how to subsidize the market's liquidity with money. He invented this thing, the market scoring rule, which later became, if you're familiar with that phrase in Ethereum, it's because I wrote it into my project and then I explained it to Vitalik and the people who did Augur and whatever. And then it escaped into Ethereum land where it has become where it's doing very well, which is great. It's not super great because I would prefer that people understand how it got where it is, which is that Robin Hanson invented it for prediction market liquidity. But the point is, it has a bounded loss. So you say, I'll put up $100, and the formula, which is letting everyone trade unilaterally. So you can show up if there's no one else trading against you. You can show up to a market where there's no one else there, and you trade against this formula. And you can trade, and you'll make money if you're right, and you'll lose money if you're wrong. You put up the sacrificial cash at the beginning. You put in $100, it will keep trading at all ranges of the market price value, and it will never lose more than $100. So the accounting checks out. So that's the ideal thing. He wrote all this about this, and I tried. He tried to explain to people. I tried to explain to people. No one ever listens to this. So it's just wonderful to hear someone ask a question about this topic, because often people will malign the whole prediction market idea, and they will say it doesn't work because look over here on InTrade, there was a contract that no one traded on, and it's like, yeah, because the subsidy was zero, and because they used this double auction thing that is especially illiquid.
Right, but if I may jump in a second, Paul.
Yes,
so this is analogous to Edmund's observation of us not observing a certain type of attack. And so this is us not observing a certain type of subsidy. So why is that?
Yes, I think it's widely misunderstood. So that's a good question as well, because of course, who wants to pay? So when you tell people it's going to cost you money, they're like, whoa, they don't like that. I think also, though, there's no business model. So like in the thing that I wrote, I tried to give there a business model where I say, I give the person who wrote the question a cut of the fee. So you pay the oracles the part of the fuel, and then I give exactly the same way, same fuel source. I give a cut of it to whoever wrote the question that they have to resolve, and a cut to whoever created the market in the first place. So all these people want there to be lots of trading, so that when there's more trading, they get more money kicked back. And so there needs to be some kind of business model. But the other thing is, it's a very insightful question, because I think there are many, many, many overlooked opportunities. And I made a huge presentation about this that I was going to deliver, but then COVID happened and there was no venue for it. And so I have to, maybe someone will, maybe I'll just give it online or something. But there's many neglected opportunities, such as, so you mentioned something before that was something like, what about the hourly rate? Or what about these people who they have to do the research? It's not necessarily about that. It's more like the information has a certain value to someone or society or whatever. We'll figure it out later. The information is worth, I mean, the information about which politician should be in charge of the United States, that's worth like, you know, percentage points of GDP growth for 4 years. So that could be worth like trillions of dollars. But the point is, it's worth some amount, and maybe it's worth, you know, how much of that is capturable by some person, someone, Elon Musk or whatever. Maybe it's worth $100 million to him or something. Well, now he single-handedly has an incentive to spend $99 million subsidizing the right market. So I think that's just one, and there's plenty. I have a whole list of things, like all the money people spend on like Annenberg fact check, political fact check. We have like a website that does the thankless job of trying to track down politicians' lies on we say both sides of the aisle because we have first past the post over here in America, but I'm not sure anywhere else, any of the other countries that you guys are in have. But we have two parties, so they try to do both, but they just try to go down, and you know, those people get millions of dollars a year in donations. Okay. You could do that. So there's lots of opportunities, and that is the frame. The frame is, what is the information? What is it worth to get the real information out?
Can they give a chance to Clément and Edmund to jump in if they want?
Yeah, I mean that was awesome actually. I think covered most of the bases. Just one thing I did kind of that did concern me about your original setup, where we've got these people who've got the inside information. And they're not allowed to trade, and then we're hoping to get some enthusiasts who aren't insiders. Looking at real markets, it turns out that whatever rules you put in place about inside information, unless you've got, I guess, a very kind of controlled prediction market setup, the people with inside information are actually going to move the price. And that also means that the people who don't have inside information, would be dumb to take part in this market.
Mm-hmm. Yeah, they're not going to research. They would just the people know, the other people would tell them, the insiders would tell them, or someone knows, when you think you know more than most people.
Yeah, and actually the insider may also trade, it's not because it's illegal to do that it will not happen. And particularly in crypto, you have stuff like Tornado Cash, you can move some money around more or less anonymously. So it's not like in a regulated market. So I think insider will be more likely to participate in those.
They do these very interesting studies where they have the stock price, they have the cumulative abnormal return of the stock of a stock, and then they say, here's every company that is doing whatever, announcing a surprise dividend or something, and they average them all, and they have the graph is on time, and the zero is then the announcement is made, and then they have before and after, and they average them all. And insider trading is forbidden, but they have this database of whatever 700 companies over a certain time period, and then it's this is 1 day before the announcement, this is 3 days before, whatever. And so then you see this, and then it's averaged out so that it's a cumulative abnormal return. You understand? So this is deleting the S&P 500 from this or whatever. So it's just, and then it's averaged of these companies. And then the line is, there's always this blip before the announcement. So there's enormous evidence in the field of empirical finance that the people do the insider trading. I kind of think, I'm open-minded to that being illegal, but I am also deeply skeptical that it makes any sense at all. The insider trading actually scams people. It actually harms the regular users, regular people in the world. They get an unfair price. They have to pay if they're short, it depends on what the insider knew. It could be good or bad. If it's bad, then it lowers the price and stops people getting it at a cheaper price. So it's better for anyone buying. And it's the reverse if the news is good and the person is short or whatever.
Okay, so but we're now veering off into answering a different question than the one I asked. So since we only have 3 minutes left, I would like to move to the very last question that I see coming in through the audience. I don't see a name attached to this question, but the question is, how do you see the future direction of oracles? Are there going to be any new directions to work with or any new implementations? So this is super open-ended, so see what you can do in 2 minutes' time.
Okay, I'll do my really short answer, which is that I have this project that I've been working on for a very long time that was originally called TruthCoin. And I think we'll eventually get sidechains on Bitcoin, sometime in the next millennium. And then you'll be able to try this out. But you can go to bitcoinhivemind.com because I moved the project over there. And we have software that you can test out. And so you can run that, and then you can see if you like that. And then you can copy it and port it wherever you like. But that's all my ideas in software form. So,
okay. Clément.
I think those are going to be more exciting. Like currently, when people talk about Oracle, you often talk about like multi-sig to get some the price of a coin, which okay, like that's better than nothing. But that's very centralized, and that's like the scope it can the scope of Remit Cancel is also very small. So I think we'll get way more decentralized Oracle and way more Oracle which are general purpose, where you can ask any question, not just the price of X.
Edmund?
Okay, so we're gonna make this forking ledger. We're gonna take a layer 2 ledger, just like ZK Sync or one of these systems, and we're gonna have the kind of the Oracle built into the ledger, so that if you get a question escalated far enough, we're gonna fork the whole damn ledger, and that's gonna mean that any asset that was issued on that ledger is going to be safe from the P epsilon attacks and stuff that we've been talking about earlier. It's going to be awesome. Hopefully, if we can build it.
Okay. So I hear backstage that we have been granted 5 additional minutes. So maybe if we could go back a second to Alice's marketing question. So how do you get people who would have information that is of value to someone else, better still if aggregated with information coming from other people, to come to prediction markets that they today don't even know about?
I think that's just a normal marketing question.
Sure.
Liquidity. Yeah.
I think over time, people, how do you get people interested in crypto that have never heard of it or whatever?
Yeah, get some interesting market. Like US election was an interesting market that a lot of people were talking about. So we just have to have stuff interesting where everyone is watching, going, hey, here is like 40% chance of this will happen. I don't know, like it could be like, no, you have like Russia, like what is the percent chance that the war will stop in the next month or something like that, where all the media and all the like social media will want to look at.
I'm kind of surprised nobody's recommend or proposing multi-level marketing scheme where part of your earnings depend on how many other people you have brought to the market.
Well, those work great at first, and then they have disastrous conclusion. Conferences like this, people talking about oracles and prediction markets, that also helps.
Okay, maybe.
Also, I mean, in the setup, it's like you've got maybe some fairly technical, some fairly specific thing you want to know about, and you've got somebody who's prepared to pay for that information. So go put Facebook ads directly targeted at the Russian embassy in wherever or whatever it is that you're trying to get information about. Go and target your marketing directly at that place.
May I ask you whether any of you personally have ever subsidized a market to resolve a question that was of personal interest to them? Or do you know anyone who has actually done it?
No, it's an excellent question, because unfortunately the answer is no, although I fully intend to. If my own system ever turns on, I fully intend to. But you're right. There's something of a tragedy of the commons issue. But it can be circumvented in some cases, like I gave the Elon Musk example. Just anyone with a large stake in the outcome, because it's just the problem just has to be solved to within the tolerance. So, you know what I mean? The bigger thing is to get off zero. Everyone is, I think, people don't really understand. You're talking to maybe like this is the only 4 people on planet Earth, and Robin Hanson, and like one other guy. There's like 6 people on planet Earth who know about why you would want to subsidize and how much better it would work when it's subsidized. And there's also the market scoring rule can have more than 2 states. In fact, the subsidy declines logarithmically with the number of states. So you could have a big subsidy and it could be betting on 10 million things, or, you know, that's not even an exaggeration. That I had plausibly designed one that had, I think it had like 480 states or something for betting on for how people should run elections in the United States. But the subsidy goes over all of that because it's just the one formula. So big upside and the costs are low. It's the one subsidy over the whole market. So most people just don't realize they should be subsidized at all. I think we have to get off zero is, I think, the bigger thing. Okay. But I think you're right that, you know, no one has.
So there is a $100 million bill on the street that nobody's bending to pick up.
Well, again, you have to pay the 100 million, but it could be Elon Musk would pay the 99 million, and maybe he would get a lot out of it. Maybe.
Yeah. Okay. Clément and Edmund, you want to add anything?
Yeah, the answer is no, and probably just because no one already made an easy way to subsidize market besides providing liquidity yourself. But in this case, you don't really know how much you're paying, and also because I guess, you know, like we are like on small fish, like let's say. There is no information which is gonna make me $100 million if I know it, you know. If I had 2 or 3 billion under management, yeah, sure. But no, we are still quite small fish for like liquidity we would expect for a good prediction market.
Okay, Edmund?
Yeah, also no, and like with Reality.eth, we kind of built it with kind of 2 ways of using it in mind, right? One was that you wanted to get an answer to a question. So we put in, so you can put in a question into the site or into the contract, and you can put up a reward for that question, for that answer, and that will encourage people to answer the question. And then if they see an answer that's bad, then to put up a bond, you know, to say that's the wrong answer and so forth. So that was one use, and the other use was to kind of prove something to a contract. So somebody wants to say, this has happened, you know, we've passed this vote or whatever it is. And then somebody else maybe wants to say, no, this didn't happen. And we found that first use where you're just putting in some money and hoping to get an answer to your question hasn't been used at all, really. It's almost entirely the second use where you're trying to prove something to the contract. I don't know if there's a broader lesson there, but if it's just that people just haven't yet come up with the right kind of marketing solution for subsidizing using markets, you know, for information. Just the complete sort of experience of, you know, this is the person who might be interested in doing it, and this is how they're going to look at the thing, and this is the person who's going to pay.
Okay, thank you. So we have used our 5 minutes of our time. I wonder what happens now. Possibly Zach jumps back in to say goodbye. I don't know.
Yes, I do jump back in. Hello. Thank you, everyone. This was amazing. We've been enthralled by the presentation. And I really wish it could go on for another hour, you know. It feels like that hour flew by. And thank you, Stefano, for the masterful moderation. And a big thank you to all our speakers for taking the time to share these insights with us. To all the attendees who have stayed through, you know, thank you so much. And I hope you've had as great a time as we have. And if you love this panel, you'll be able to catch Clément at our main event in Berlin this June. We're still working on getting Paul, Edmund, and Stefano to come as well.
Stefano cannot.
But we'll work on it, Stefano. And we have many more top speakers attending, including a few people who are watching this right now. Hello, Sasha and Julio. The Blockchain Oracle Summit is going to be the place to be for anyone who's interested in how data moves on the blockchain. And we'll have 3 days to discussions from leading speakers from across the DeFi, TradFi spectrum. So we'll get to go into a lot of detail about how oracles will enable the future of Web3. Please keep an eye out for emails coming your way that will include discount codes, our full brochure, and if you missed any part of today's presentation, the full recording will be online by tomorrow. Thank you so much, everyone.
Okay, bye-bye.
Thank you. Thanks for organizing. Cheers.
Thank you.